The topic today, how to spot an SBA deal. In today's webinar, there are a few things that we're going to cover. First, how to choose the best loan product for you and your small business client. Quick tips for spotting an SBA deal, how to keep the door open with SBA financing, and again, today's general topic is how to spot an SBA deal. So I'll also speak to what you actually do with an SBA deal once you think you have one. So what are clients actually looking for when they walk through your door? I would say more often than not, clients don't reach out to request a specific loan type. For an example, a conventional loan, a micro loan, a 504 loan, a 7A loan, or etc. What are they looking for? Money. They're looking for money. They're looking for a loan. They're looking for an approval. You and your institution are the gatekeepers of the money. You decide what product makes the most sense for you and your client. I would say that you're the expert and your clients will lean on you to point them in the right direction. Lenders with non-SBA loan options, and another way to say that are those that have conventional loan options, should start there. This would be a prudent first step on account of the SBA's Credit Elsewhere test. Through Credit Elsewhere, let me be clear, I'm not suggesting one explore options for applicants outside of their four walls. Certainly don't let a client that you could serve go elsewhere. But if a client does not fit into a conventional credit box, the SBA's loan products provide both a credit enhancement and an expanded credit box. This expanded credit box is an invaluable tool, which should make lenders and their clients happy. The deals that we typically see in the work we do with lenders like you all from across the country are what I would call but-for loan requests. It's kind of a quirky name, but it's hard to forget. But for one reason, or perhaps two, you not extend credit to an applicant. So a couple of examples. By all measures, you see a loan request that is decent. The applying business has adequate cash flow, an experienced management team, longevity, but they lack adequate collateral. But for adequate collateral, this client could obtain conventional financing. Another example, call it a loan request for a business that has adequate collateral, an experienced management team, great credit history. In other words, they pay back debt, but the business is expanding and cash flow is reliant on projections and would benefit from a longer repayment period. Let's just say 10 years versus 5. You could say no to these clients, right? And in some cases, saying no certainly is the right decision. But what about the clients who fall just outside of your credit box? When you say no to these clients without exploring an SBA loan product as a possible option, you are quite literally slamming the door on your client. Don't slam the door on them. To explore this notion further, let's look at the client journey. As we see depicted here, a client's first step is normally to call on you, their lender. They then meet with you in person or over the phone. So what happens when you close the door on them? What happens when you cannot provide an applicant the money they're looking for? What's the risk? The answer, a valued client goes elsewhere. Just because you might say no, the client journey is not over. And in fact, chances are very high the client will continue their pursuit of financing. As a prudent lender, I understand an SBA loan guarantee will certainly not turn a bad loan request good, but the credit enhancement of an SBA guarantee may provide the added measure of protection you and your institution need in order to feel comfortable with the request. A wider range of loan products made available by the SBA is a win-win for you and your borrowers. Your customers have more options for financing, clearly with you, and you have greater resources at your disposal to increase loan volume, market share, and ultimately profitability. Friends, the cost of closing the door on a client is incalculable, especially for clients that, by my definition, are but-for clients. It is worth overtly stating here that many SBA loan requests we see come in on account of a client's failed attempt to obtain a conventional loan with a lender who either does not offer SBA financing or who failed to explore SBA financing as an alternative prior to closing the door on them. How do you keep the door open? You keep the door open with SBA loan programs. When compared to conventional loans, the SBA's extended terms and competitive rates generally result in a reduced monthly payment for clients. This means it's far easier for borrowers to qualify for and repay loans. And for you, the lenders, these benefits help increase loan volume by getting to a yes more frequently, and I dare add, more safely. Offering SBA financing does not have to be preceded by a formal decline. And I raise this issue because routinely we actually see lenders that decline clients for a conventional loan prior to offering an SBA alternative. I'd be so bold to say that's a poor practice, and it doesn't provide for a positive client-customer experience. As a lender, you're tasked with routing clients. And I would say it's much like the role of, say a traffic cop. Some clients go here, others go there. When you have a client that merits the SBA path of approval, we as your partner want you to know that Prudent Lenders is here for you. As you weigh options, and when you have a but-for loan request, you can and should request the Prudent Lenders team prepare a fast-track assessment, or as we call it, an FTA, determine if the credit is eligible for and if it fits into the SBA's expanded credit box. A few of the most common SBA deal types we see are as follows. Example 1. An existing business buying real estate to house their operations. The most common but-for of these transactions is that the business lacks adequate cash flow to meet the demands of a conventional loan down payment. And let's just call that 25%. The reduced equity contribution requirements made available with SBA financing in these instances can help a business lock in their occupancy costs through ownership versus a lifetime of renting. Another example, aspiring entrepreneur is buying an existing business. The obvious but for of these transactions is that the buyer is new and there's no way to ensure the business will operate the same way or perhaps better under their leadership and direction. Their lack of experience and certainly a lender's uncertainty of the future outcomes within the business might be offset by the credit enhancement of an SBA guarantee. Another example, startups, expanding businesses, recovering businesses. An example of a recovering business could be a business that had a setback but is now stabilizing. So we see these scenarios routinely, and perhaps you do too. The most common but for here is that these requests for financing are relying on financial projections and do not demonstrate adequate historical cash flow. Again, these requests for financing are reliant on projections. Friends, I would say that even if your team or you personally are not ready for us to prepare an FTA to see if your client would be eligible for SBA financing, but nonetheless you still have a but-for transaction, our invitation both today and always is to pick up the phone and to call our team to discuss the particular deal that you're exploring. Chances are we might be able to help pre-screen the scenario that you're faced with verbally prior to collecting any additional paperwork. So, you. It sounds like a line from a Toby Keith song, but really though, you, as the lender, are the face and you are the voice of each loan request. Once you've spotted an SBA deal, what do you do with it? And how do you set client expectations as their journey with you continues? The best way to set proper expectations with clients is to clearly understand the process. There are things in life that you can't fake, and I would be so bold to say that it's hard to fake the SBA. Here are some important milestones, each which requires an updated set of client expectations. So whether you're a veteran SBA lender or a new one, what I'm about to cover is critical, and with respect to setting client expectations, it's certainly worthy of note-taking. Let's start with the FTA. A completed FTA, or fast-track assessment, it's not the end. It's just the beginning. I highly encourage you, let clients know that your green lighting of an FTA is only the first step. A best practice is to engage the client at this point, again, once you've given their particular request a thumbs up, to issue a letter of intent or an LOI, and to collect your packaging fee at this moment. In the LOI, let the client know what comes next. And what comes next? Our team will provide an underwriting checklist if the client has agreed to your LOI. Underwriting. This is a comprehensive underwrite, which requires an attentive client. Underwriting does not start until the client has provided a complete package, and that is defined as everything in the underwriting checklist. Please make sure that clients are aware of this truth for the benefit of all involved. Now, questions and underwriting go hand in hand. lenders should communicate the questions and paperwork requests that arise at this stage are par for the course. And let's be honest, no one likes added paperwork or being interrogated with questions. Lenders should reinforce that paperwork requests are really only made because something is needed. Lenders should also set context around questions. An analogy I often use is that when a loan is presented to the SBA and or to a lender's credit committee for decision, the applicant, he or she, is not invited to come and address the attendees. I've sat through credit committee meetings for years, and they're never like Shark Tank. Consequently, the one sure way that a client has his or her voice and story heard and shared is through their dialogue with a lender. In other words, you, and ultimately our team, as together we literally write up each client's story by way of a credit memo and speak on behalf of applicants through that same memo to those who are empowered to decision loans. As a tip, if you're working with a business run by more than one owner, find out quickly who the better, as I call it, paperwork person is, and then lean on them to provide the requisite paperwork. SBA submission. Whether you're a preferred lender or not, all SBA loan packages must be complete. While the client is not directly involved in loan submission, they could be. So occasionally the SBA will come back once they've received the loan package with a clarifying question. And when they do come back, they might have one or perhaps two questions that will require clarity and insight from the client. Again, as a lender, please make sure that clients are aware of this to ensure they have proper expectations of the process. In other words, just because your institution has approved a loan and given it a go-ahead, it's not the final go-ahead until we've secured the SBA's approval. Closing. Clients' participation in closing is arguably the single most important factor to how fast or how slow a loan closes. As a tip, several closing items take time. Examples could include obtaining life insurance or tracking a client's equity or perhaps even obtaining general business insurance. Getting a head start on these items is highly encouraged. Our team will equip you and consequently your client with proactive tips on each unique file as we work together through them. As an FYI regarding closing paperwork, specifically the paperwork that one signs at the closing table, details a client's responsibility to provide your institution, and by extension Prudent lenders, with items like financials and proof of insurance and other items over the term of a loan. I would strongly encourage all lenders become familiar with SBA loan notes. This will ensure you're aware of and versed in explaining to clients the legally binding commitments that they make when a loan closes. Servicing. Your relationship with clients does not end at closing. Closing is a milestone. It's not the finish line. Closing starts a 5 to 10 year partnership. Over the course of the partnership, we'll reach out to clients on your behalf and request, as mentioned before, updated financials, evidence of insurance. We'll reach out to schedule site visits, and etc. For lenders, this partnership you form with clients provides an opportunity to obtain repeat business from them by expanding the number of services that you may offer, including lines of credit, business credit cards, and etc. As an FYI, At any point in the lending process, it's fair for lenders to say, I don't know the answer to that. Let me get back with you. If you're ever unclear on something, as your partner, we're here to help. Our website has our entire process detailed in writing, and it goes without saying, our team is here to assist along the way. Just give us a call. As we wrap up our time together this afternoon, a concluding thought and a question. In fact, the ultimate question. Would this still work with an SBA guarantee? If you ask this question every time you review a credit, you'll force yourself and your team to look beyond your credit box. The impact of asking this question will undoubtedly lead to an increase in loan volume. Establishing the practice of objectively looking at every deal through the lens of routing loan requests to the appropriate product, and one that makes sense for all parties involved, will ultimately increase the number of wins for you and your team. This will also have a positive impact on your centers of influence. In other words, those with whom you work to source deals. I've seen firsthand how offering SBA loans opens the doors to both current and prospective clients, as well as to reiterate, your centers of influence. If you're ever unsure of the answer to the question, would this still work with an SBA guarantee? I would invite you to contact our team at Prudent Lenders to find out. Thank you for attending today. Here's my contact information, and as suspected, I was worried about the amount of time that we might have available for questions, but I see a couple that I think I can sneak in here in the last minute or so, because I think they might be applicable to everyone. As I go through this, let me pick off this first one. Question. Would you and your team be available to train our bank regarding the Prudent Lenders process? Looks like they go on to state, the bank has had a lot of personnel transitions and could use a refresher. So the obvious answer is yes, right? Certainly to you who asked this question, we'll be in contact after the call, but the same answer would be applicable and true for all Prudent Lender clients. I would say that we're a teaching team, so let us know how best we can teach and train your team. Next question. I'm new to my bank. Welcome. Does Prudent charge for the fast track assessment? The answer is no. No, we do not. Maybe one more just because it's simple and short. The writer says, please don't judge me, but I pulled up the Prudent Lenders website on my second screen during the webinar. I see there is a client portal. Interesting. How do I get access to it? The simple answer is if you go to our Prudent Lenders website, prudentlenders.com/register, you can sign up, and all of our clients are welcome to use that. If additional questions come up, again, information here on the screen, you certainly know how to reach out to me. Please don't hesitate to reach out if you have any questions whatsoever. And then our question for you is, do you have a deal that would benefit from an SBA guarantee? And if you do, please don't hesitate to get in touch with either myself directly or anyone from our team. Thank you for your time today. Thank you for your partnership. Please let us know if there's anything that you or your teams might need from us. And with that, that concludes our webinar. Thank you for joining today.